Lakshman, welcome back to F.A.C.E.
Good morning. How are you?
Good, Lakshman. How about you?
I
I want to
am
thank you
good.
for promoting
Oh
your
yeah,
appearance. And you know
sure.
what? Yeah, I don't know if you read what I said on LinkedIn, is that every time we talk to you, you leave us with clarity.
Wow, thank you. That's a very kind. Those are kind words. Um, you're making me think. I was thinking of a comment from one my teacher, Jeffrey Moore, and one of he's into cycles, which is different than some of the model building stuff. And one of the things he was very interested in was making decisions based on what you think you know. All right, which is that's the name of
at
the game,
at
and
the time.
the name of the game, and I forget which president it was, or it might have been one of the CEOs who said, I just need a one-armed economist. Instead of
Yeah,
on the one hand, on the other hand, it is complicated for sure, but you have to boil it down and make a call.
yeah, you
And
do.
the the leading indicators that we're using, they try to do that. They're summing it up as objectively as we can, and it's there's a strong
Okay,
effort to make it objective, and then it's up or down.
okay. I want to talk about what you said in the promo about that Main Street is struggling
Yeah.
while Wall Street is shrugging. Now, I keep hearing about um, the consumer is not dead. We're going to have record travel here again over
Mhm.
Memorial Day, air traffic, people on the road. Hotels are expensive and people are still going. Um, Tell me what you see as far as the state of the consumer. Uh, you know, uh, they've been accumulating more and more debt. Is the consumer still healthy and still has funds to run on, or just are they living off credit cards to do the things because after COVID, people have adopted why save for the future? You better live now.
Right. Right.
What do you
Well,
think?
I think it's a little bit of everything you're saying, right? And so those are the cross currents that make it confusing in a way. You can select what you want and say, "Whoa, look at that debt; it's going way up. That means we're done." Or look at uh, one of the personal consumption numbers, and it's still pretty positive. Or the restaurant is full, so there can't be a recession. And some perspective is helpful. I'm going to pull up a chart here, and forgive me, I'm not the best on the sharing, but I'm going to try here. Let
You
me see if
got
I
it.
can let me see if I can get to a chart. So I'm
Okay.
sharing there now. I think
Yeah, it
um,
shows it's a video.
that's a video. Now I'm getting to here it is. Okay, and I think there we go. Um,
Okay.
So our bottom line is that the recession, the consumer, what's going on with the consumer, all these cross currents back and forth, they're completely consistent with a recession, even though uh, there are some numbers that are positive. Um, and and one thing I'd love to zoom in on here for you. Um, so here, forget about the overall economy, forget about inflation. We're just talking. I'm just addressing this question: how's the consumer doing?
Okay.
Okay, and I'm showing you a chart from the late '60s through now, and the shaded areas you'll be familiar with are recessions.
Right.
Um, and on the bottom, we have two different measures of consumption. You have real retail sales, which is the dark blue line. And then you have the teal line, which is real personal consumption expenditures. And what you see is that overall consumer spending growth doesn't always, that's the teal line, is the really broad consumer spending growth.
Right.
That does not always fall during recessions, number one. And number two, it's very often positive as a recession is getting underway. Those are just empirical facts. It's not my view about anything. This is well revised hard data on how the consumer acts going into recession. So you can see, for example, at the start of these shaded areas, which we know in retrospect were contractions in the economy, you can see real PCE is positive. You can see my little hand there that I have, right?
Barely, but
Yeah,
yes.
I know. Let's call it a couple percent. Okay.
All right. Yeah.
I'm not going to 2-3%, whatever it is.
Yeah.
And that's not very different from where it is now.
Right.
Okay. So
I see that.
that's the number one thing to understand. And you can see we have recessions like the '01 recession. It stays positive the whole way through. Okay. In that recession, I think you lost 3 million jobs.
Yeah. The
Right.
dot-com
So
bust.
yeah. So here in the
And they
late
moved
60s,
right to another asset class after that. That was the beginning of this housing boom.
yeah.
After they popped the 2000 bubble, I remember, living on the coast and people go, okay, well, I'm out of the market. I'm just going to start accumulating more real estate. And they were right.
Yeah, and you start all the flipping, all the
Yeah.
flipping shows. So one thing, so I take your point. Hey, some people are saying the consumer's okay. Jobless claims just now came in. They were better than expected. What's to worry? Why me worry? Kind of thing. Remember the guy from
Yeah.
Mad Magazine?
Yeah.
So here we are, and just the reality is that teal line does not tank when a recession's getting underway, and even in the depths of the recession, it doesn't go. The real PC doesn't go that much. Now let's look at the more narrower real retail sales, the stuff you're buying at the store, kind of stuff. And there you see a little bit more amplitude in the downturn. Here, this chart is a month or more old. I think we have another retail sales number. It's gone down again. Real retail sales. I think you have 6 months negative growth. Empirically now, we've never seen 6 months of negative real retail sales growth outside of a recession. Okay, so that's just kind of where are we now? I haven't done any forecasting, right? That's just where are we now,
Right.
In terms of these consumption numbers, and what we know in the rear view mirror has happened around recessions. So that's the lay of the land. And then we're switching over. You go to the top part of the chart. That's a forward-looking indicator, the U.S. LIX, the U.S. leading indicator of consumer spending growth, and it tanked. Right? Look, it's a much more volatile series. This is meant to turn ahead of turns in actual consumption growth.
Yeah, it exploded during the pandemic.
Yeah,
Everyone was home consuming, right?
You have a little shutdown in the recession where this kind of jerking down, and then boom, you got money in the bank, everybody bought goods, then you had the reopening, it kind of jerks up a little more, and then the sugar high starts to burn off, and we're coming back down, and here we're jerking around at what you could see again, just in retrospect, you could see these kind of readings have been associated with recession. The one exception is right here in the early 2011, 12. And at this period, we had
that was the last debt ceiling debacle.
Yeah, we're gonna nice segue. We had a bunch of stuff going on there. We had a slowdown. There had been, it was then Vice President Biden and Yellen were talking about the recovery summer. and we ran smack into a very hard slowdown. It looked to our eye that it could even be recessionary. It turned out to be the worst non-recession the hardest soft landing in the
Okay.
last half a century. We had 2 quarters where GDP just barely skirted positive, and that was the beginning of all this QE stuff. Okay, so today is a very, very different situation, right? Where it's going to take some events, let's say, for there to be room for a policy reaction like that. I mean, I don't. I'm just trying to think, like, what's the lay of the land where you could get some attempt at that kind of stimulus.
How about the banking crisis worsening? I mean, I look at the bonds and the treasuries are under pressure. They almost look like they could make a move towards new highs in yields.
Yeah, and I 100% take your point. We had said, like, kind of looking at these cyclical tea leaves, so to speak. I think it's back in January of 2022. It's a long time ago. That look, they're going to hike until you get hit with a recession, which means you've got to have job losses, which we don't have, right? The numbers just now are saying, hey, not yet, right?
Yeah.
So you've got to get hit with the actual recession in your face, which is, I think right now we just need to see negative jobs growth, which we don't have, or something has to break. And so now we go back to the banks and the higher for longer and all this, and it's putting stress on all of them. We know that. It seems that they're saying, hey, we can fix all of these things that break. Let's just call them mid-level banks. With some, twine and Band-Aids and tape. But we're not going to shift off of our higher for longer yet.
Okay.
That's
so
what it
could
seems on
be
the face.
it sounds like contained, that Bernanke said in '08.
Yeah, and I think you have
contained.
echoes of that coming out now by whoever the policymaker is saying, look,
Maybe it's the Fed's goal, Lakshman, they knew how the banks were positioned.
yeah,
That everyone bought bonds and debt when rates were at Civil War levels. They hadn't been there in 160 years, and
yeah.
that they would take hits during their interest rate cycle. And like you said, they were going to keep doing it until something broke, and something did break. And then
But
they still raised rates last time
yeah, so what they're
after
saying,
something breaking.
so we don't have the system seizing, right?
Right.
It feels like, are you too big to fail or not? And the judgment was, nah, you're not. We're gonna make a deal and have someone take you over, or the insurance company, the FDIC will take care of it. You're not too big to fail. There were
Okay.
in '08, you had Lehman. Then you get the whole too big to fail kind of mentality, and we're just not there yet.
Okay.
Okay, so it's hard to predict what's going to happen with policy kind of stuff, but it feels like, in order to have, well, you see, the other thing is inflation, right? You don't have the same inflation backdrop. It's radically different inflation backdrop. It's all water under the bridge, and we've talked about it before, about how they messed up on this inflation cycle, and they're trying to put that genie back in the bottle and regain the cred of inflation fighting, and they don't have that quite yet, because going back to the promo for this piece, Wall Street is quite excited by the pace of inflation coming down.
Yeah.
Hey, we're good to go.
Yeah.
Job done. Okay, I cry uncle. Stop. But Main Street is sitting there saying, wait, the prices are higher. You talk about growth rates all you want, but
Yeah.
But if I try to buy a used car, it's almost 50% more than it was a couple of years ago. And
Even
it's the same
beer.
freaking car, and even beer, all that stuff, beer and chips,
And
and
now pasta.
oh my God.
The Italians are going through
Well,
a
actually, I
pasta
think
crisis.
out of all those, the beer may be the most critical. But okay, all right. So
I paid
so
$18 for a 12 pack. It's unbelievable. $18 for a
it's
12
not
pack.
fair. That's not fair.
And you know, it's not because of the cost of barley or energy at the plant at the brewery. I think there's actually kind of that. Maybe this is what economists mean, that once inflation starts, people just raise prices because they can, not
Wait, what
because
happened
they
with Bud
have
Light?
to.
Bud Light's cheaper because they got caught up
Oh
in their
yeah.
whole
Oh
thing.
yeah. You know, I getting back to banks, there are some talking about to prevent future bank runs of limiting the amount of cash or money customers can withdraw from their account. Do you think they're going to get that draconian?
Gosh, I hope not. I don't think so. Um, when you get into full on, I mean, where do you get capital controls when the authorities are starting to freak out, right? That's when you get it. So we had it around the war, World War II. Uh, China's got some going on now, for example.
Yeah,
Um,
they do.
those are not signs of things working well.
Right.
I really would really hope that we don't go there. I mean, at the end of the day, you've got what's the pool that we're swimming in? We're in a free market capitalist economy. It has cycles. I mean, what do we expect, right? They're going to happen from time to time, no matter what. And the thing is you try to smooth them out a little bit with policy if you can. I think that's fine. That's a reasonable thing to try and do. But we all know what's happened in the recent years.
Yeah.
Some of that is external with the pandemic and reacting, trying to do whatever we do. Fine. But here we are. After you goose something that much and you're that far behind the curve on inflation, you've got to have some payback. And here we are. And so now that is still unfolding. It's not over.
Is the Fed going to raise again in June? The market doesn't think so. Are they done? Are they on pause right now? I know I'm not sure if the Fed is your bailiwick.
Yeah, well, it has to be, right? In the sense that um, they are a big player, right? If you're controlling parts of the cost of capital, you're a player. That's an important driver of the cycle. We can see where we think we know where the direction of growth and inflation, right? And that, whether they know it or not, is going to impact their reaction function. So in that sense, yeah, we have something to say about the Fed. Let me go back to a share because I want to switch gears to
and I
inflation.
also we have I think a very insightful question from one of our attendees,
Yep.
Colleen Banks. What new insights have you gained from the current cycle? Anything
Oh
new
yeah,
from this?
no. Probably so many, and I'm still trying to figure it out. One
Okay.
is I do get surprised, but it's been, I've been surprised for a decade, so I got to get over it at some point about how about how much they'll intervene.
Yeah.
I mean, it's gargantuan,
Yeah.
and we all get brought up to do the right thing and this and that, and it just seems like this is really over the top kind of intervention, which speaks to, I think there was this whole thing, after the financial crisis and the Great Recession, which wasn't supposed to happen. You were quoting Bernanke from '08, right?
Yeah.
These guys were shocked by all this. And something that is a feature which is a recession of a free market oriented economy, is seen as a bug. Like, we got to get rid of it. And by hook or by crook, no matter what the cost, we're going to intervene and try to get rid of it. And we have a decade of that, which was enabled. So all the post GFC period, that whole decade, we go to ZIRP and very low interest rates, which we were able to get away with for several reasons, including the fact that China was exporting a lot of disinflation.
Right.
That is not the case today, number one, right? Number two, we're way behind the curve on inflation, right? This thing was a big screw. I'm showing a chart here of inflation. So the bottom line is the target. That's the thing everybody's talking about. The black line is the headline inflation, and the gray line is the core inflation. This is a few months old, but it's the general picture, right? This is from March 3rd. Okay. Now on the top line, you have the future inflation gauge. That's a very important indicator. And here here's the policy mistake, where it's transitory, but the forward gauge runs to a 40-year high. Okay. And here we get a 40-something year high. I don't know exactly, but it's roughly. I'm not suggesting magnitude is the strength of this. I think it's direction. So here it starts to roll over, anticipating the peak. We have Ukraine in here. We get a little supply stuff that happens in here, is the Ukraine and all that interruption. But you see the basic cycle turn down. This is the interesting part. There. Look at that. That's going sideways, and I'll share with
going down, so inflation's sticky.
So I'm sharing with you, this is, giving you a treat here. That's continued to go sideways, okay, through the latest reading. And that is all of that sticky stuff. Now let's go back and look at the guts of what's going on. Food and energy can help drive the headline and whatever, but here we've got core. And the whole rent stuff is a problem, and will hopefully be helping that down. But at this point, a key thing holding that gray line up and keeping it sideways is wage growth.
Okay.
And now go back to your beer. All right, I'm going to bring it all back. It all comes back to beer. Okay, and chips and used cars. Okay. So here you've got this idea, once you get inflation around you. Look, remember, all the companies, all the businesses had no pricing power for a long time. And now they've got pricing power. And your nominal revenues look okay. I haven't seen the very latest data, but it was a month or so ago. In Germany, by the way, today, you get negative GDP. They're in recession, right? So probably started toward the end of last year. The Germany had, I think, headline retail sales, consumer kind of stuff, 2%. But when you adjust for inflation, it was -7%. So you have this illusion with the inflation. This inflation gives you this illusion that you're cruising along. But
it's only nominal gains.
Yeah. And so managers, it's not that managers are unaware of their input costs. They are. I'm not saying that they're dumb or don't get it. They get that. But it kind of feels okay. You got a handful of cash, right? You have the memory that it was hard to hire people last year. So you don't want to just cut them right away. You're hoping for that second half recovery to bail you out. And you're hoping that you can charge $18 for the beer. And so far, so good. But you are getting squeezes.
I'm not going to that liquor store again.
Well, I mean, the cure for high prices is high prices, right? So those will go down, and you can stock up later. I don't know how long you can hold beer for it. before it goes
Uh,
bad.
can we
But
can we talk about a little bit about the debt ceiling and
uh-huh.
how that how that
So just to put a pin in it,
drum?
Dale, real quick on this
Oh, go
chart,
ahead.
higher for longer, right?
Higher for longer.
Higher for
That's
longer.
what they're saying.
They're saying it. They even said something which I thought, just was a slip of the tongue, but he said it, and he said it more than once, which I want wages to go down.
Yeah.
And now again, going back to growth rates and levels, he didn't say wage growth to go down. Because I'm talking about Powell. He
Right.
talked about wages to go down. I got to tell you, for wages to go down, you need to see that unemployment rate moving, and not by a tenth of a point. So Powell is saying certain things that are completely consistent with higher for longer and hard landing. And the question will be that
Will he
right
have the
now,
political will to follow through?
yeah, I said that we used to call it the intestinal fortitude. Does he
Yeah, that's
have it?
right.
Does he have it?
I call it intesticle fortitude.
All of the above. I mean, and
All right.
he's getting incoming fire already with the unemployment rate low. So now let's go to the
Yeah.
debt ceiling. And I'm sorry, on the learning of what do we learn since the COVID crisis? I want to just throw in one more thing. We're still in the backdraft of that stuff, right? We lost a ton of older workers,
Yeah, they're not coming back.
and they're not coming back, and we're getting really, really crazy stuff as a result, right? Anecdotally, you'll have like a seasoned construction worker who says, "That's it, I'm done." And if you try to replace him or her with someone younger, they're just not as productive.
Yeah.
It might take two of them or more to get the same
Yeah.
work done. So our productivity growth is just slamming. It's just not good, which is inflationary.
Right.
Okay, so let's move on to the debt.
Okay. So let's talk about the debt ceiling. Kabuki theater, or is there intention? Some people are saying let it happen. Matt Gaetz is saying, well, we have the Democrats as hostages right now. The X date now doesn't matter. We have more time than June 1st. Is this 2011 or worse?
This is a bit more of a political discussion. I think that
Yeah,
it's right now it's like a hot potato, right? And
yeah,
whoever's holding it gonna get blamed with it, they'll
yeah.
cry uncle. And so that game is still going on.
Maybe
Uh,
they all want an excuse. The Republicans want to blame Biden because, and the Democrats, knowing that the economy, you're going to be right. They probably believe you're going to be right.
they want to blame
How are
it on
they
the
going to
debt
win?
ceiling. 100%.
No. How are they going to win re-election without a scapegoat or an excuse? And the Fed probably wouldn't mind this happening either because it would give them cover. Well, it wasn't our policy; it
Yep.
was it was the government
It's
not
so
being able.
funny. It's so interesting. So real time, I've done real time inflation monitoring since 1990. So I've seen a few. There's obviously many more of them, but I've seen a few in real time. I have to tell you, people don't recognize recessions when they're starting. It's
Right,
only you see it in retrospect. And it's typically around an event, a negative event. And you say, because of this really bad thing that happened,
right.
there was a recession.
Here
And
you go.
so, for example, 9/11, horrible, right? Totally joined with that recession in
Yeah,
everybody's mind. However, that happened 6 months after the recession started.
yeah.
And
.com pop. Yeah,
and all of these things. So all of the stories that you think are like Lehman, right? It's linked with the recession, but it happened way inside of the recession. So let's say debt ceiling, there's some blow up and car crash in the coming months. It still may be that the recession actually started earlier,
right.
and the debt ceiling will be associated with the recession. And just to clarify on that, because it sounds a little confusing, how could a recession have started without jobs being negative? That has happened several times. The most extreme was in the mid 70s, in the 73, 75 recession. Jobs grew for 8 months into the recession and then fell. And that was a money illusion kind of backdrop, an inflationary backdrop. So that has happened. I don't know literally that that's happening now. I think this whole COVID messing up the workforce is making it super hard. So I think that we have a very tight workforce because of COVID. We've got the money illusion.
We've got a tight housing market because of supply.
You've got
He's
tight, all
trying
the
to break.
supply change.
Yeah. We have all of this going on. So when are we going to get the headlines of what you predicted 8 months ago?
Well, either something big breaks and everybody says, aha, there's a recession because of the debt ceiling or whatever. And then they'll say, oh, yeah, that was obvious. Okay, fine. But that'll be the story. Or you're going to get some negative jobs numbers, and it'll probably take a couple of months of that before people say, okay, it's here. And, I don't do like monthly job number predictions like that, but it's before year end. It could be by the fall.
Okay.
I mean, and you see managers for the most part, unless you can brand yourself an AI brain of some sort, saying that I'm letting people go.
Okay.
Right. I don't know. Can NVIDIA hire everybody? That's
I just wanted to put your website up.
Oh yeah, thank you. Thank you so much for doing that.
So this is where you could go to get research. So your research, retail people or big companies are your main your main clients. But do retail people that just want to learn more about what you're doing go ahead and also subscribe?
Yeah, well, it ends up being a little pricey for retail. I mean, we have family offices and stuff, but but for retail, what I would say is go to businesscycle.com and check out the resource center is a pretty good spot. And one of the things we're going to do there is always put any interviews. We'll throw this one up, for example. And the other thing that's here, that's a new thing that we've started to do, is this thing called the column. And this is not an interview. This is where we're trying to share some of the institutional memory nuggets of it with everybody.
Wow, that's great.
So this is just straight from us, and you can kind of get in there. So when you're playing around and you're wondering, like, what's the Fed going to do? This is a nice piece to take a look at.
Comparing the 70s.
Yeah, it kind of gives you some of that cyclical history and the backdrop of the money illusion, all that stuff. And then, of course, you could follow us. I mean, we try to do stuff on LinkedIn. Like whenever we're doing something, have something to say, we throw it on LinkedIn or Twitter.
Okay.
And that's how sophisticated we are with the social media.
That's my marketing plan too, Lakshman. So let's wrap it with how much longer will Wall Street be able to shrug this off?
Oh,
it seemed like they were starting to, it's really concentrated in about 8 stocks holding up the whole market.
Well, we have that. So you have that whole concentration in the tech AI kind of stuff. Every time, it seems to be that they're fixated on the Fed, for better or for worse. Maybe the debt ceiling. The debt ceiling, let's say it gets resolved, there'll be a little rally, but it didn't really change anything. Okay, nothing really changed in the cycle if that happens.
Yeah.
So it's like, is the Fed done? Is the Fed done? Is the Fed done? So I can.
How about earnings? They've all been beating. NVIDIA blew out earnings. Apple had good earnings. Microsoft had blowout earnings. So isn't there going to have to be some earnings compression?
Well, yeah. I mean, it would be great if those were the companies. If those companies were the U.S. economy, but they're not, right?
Yeah.
The
That's
U.S.
true.
economy is I mean, that's a slice which has a structural, technological kind of opportunity. But when you go to the full economy with all the real stuff and the construction and the people facing services and all these things, it's a very different story. It is discretionary. And I mean, at the end of the day, Apple can do what it's doing. And you have to say, is an Apple phone discretionary or non-discretionary?
Yeah.
Is advertising discretionary or non-discretionary? That starts to hurt. It starts to get in there.
I'm bearish Apple. I'm short
Yeah. So,
Apple.
I mean, if they have another story, away from the phone, right?
Yeah.
If it's away from the phone and they're selling something else, by all means, go for it.
Yeah.
But here, if push comes to shove, do I need to get the next phone?
No. I've had phones for 8 years. And you know what? China is a big deal. They just, banned Micron chips.
Yeah. China, by the way, China is the thing, right? So one thing on China to share, and then I got to wrap too.
Okay.
We're running long. One thing on China
Can't
is
help it.
yes, there's so much to talk about. So one thing on China is yes, the reopening, they technically pop out of recession. They've got some services activity. Okay. Their industrial side is not grabbing.
Yeah, look at copper.
Yeah.
Dr. Copper has COVID.
So you go back to Wall Street. Wall Street's like, okay, we're done, right? Powell is done. The China's back online. We're good to go. Oil should go up. Yeah, look where it is. Look where copper is, right? Because that industrial piece is still slipping. It hasn't grabbed yet.
Yeah. Okay.
And so there, again,
So
everybody's just there. Everybody's sitting there going, "Are we there yet? Are we there yet?" And we're not there yet.
So it used to be when America gets a cold, the rest of the world gets pneumonia. Maybe now it'll shift to when China has a cold, the rest of the world gets pneumonia.
Well, they've been a big player with that huge debt growth last time, and people are wanting it to go back to that, and that's not happening.
Lakshman,
Thank
you
you.
did it again.
I hope it's clear.
I was so confused, and now my confusion is clarity. And everyone, please follow Lakshman on Twitter at Business Cycle, or go to his website, economiccycleresearchinstitute.com, and keep up with this guy because he hasn't changed his tune since you and I have been talking. And we'll have to have an expensive beer when the headlines hit the
Maybe
Wall
we'll do a
Street Journal.
homebrew.
All right,
All right.
Lakshman.
Thank you.
All right.
Bye-bye.
Thank you very much.
You're welcome.
All right, everyone. Hope you enjoyed. Follow Lakshman. It's a must. And you could join the team in 5 minutes on the Morning Edge. I'll see you guys tomorrow. And we're going to have Mark Chandler tomorrow to make up for the other day. Good hunting, everyone. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.